Welcome back to the channel. My name is Brad, and I'm looking at my screen just to make sure everything is working correctly. I'm hoping everybody can hear me. So let's talk about, first of all, none of this is financial advice or any other advice. It's just Brad out on the internet. Here you have it. We're going to talk about gold, Bitcoin, how the boosted funds are going to work. And a big shout out to my community because they pointed out that NEOS filed for a new fund on Friday. And we'll talk about that one and what we may or may not expect from it. NEOS is coming out with a bunch of new funds, and we're just going to have plenty to talk about for the next 6 to 8 months. Man, they do a good job, and they are coming out with funds just all the time. All right, so let's talk about gold. There's been a lot of talk about gold here. There is so much talk about gold. It is crazy. My articles that I've been reading on Seeking Alpha have been saying, forecasting Bitcoin. Gold is headed towards $4,000. See some resistance around 3,600, which is close to where we are now, but they're forecasting moving forward up to $4,000. We'll see if that really comes true or not, but hey, I'm more worried about the income because I'm retired. So if I look at income funds, I want to put up IAUI, which is from NEOS, KGLD from Curve, Bar. If you don't know what Bar is, that's from Granite Shares, and it's got a very low expense ratio, very low, lower than GLD. Anyway, I'm going to go ahead and give out Retired on Dividends a big shout out. Glad that he can make it on a Sunday morning. GLDI is another gold fund, but hey, when we look at gold, it's moving up. We're making 12% either with Curve or NEOS, or you can buy the GLDI. It's actually been out for a little while. It just rates a little more on the underlying. I'm just not a big fan of writing everything on the underlying. But anyway, take your pick. Gold is definitely probably going to be something that you probably should think about in your portfolio. If you didn't catch it the other day, I was out on X Spaces with Quan, and Howard showed up from Curve and said that, hey, you might want to hedge the market a little bit to get a 12% payer on gold. I probably have to agree with them. I think that gold should be in everybody's portfolio, even if it's just a small bit. That's okay. If you're younger, maybe you're not in a gold. As you get older, you kind of want to hedge some of those bets because you don't know where the market's going. So we're just going to go and say gold should probably see something that you should hold. I hold it, and I do hold the NEOS fund and the Curve fund. I get into this whole fishing pole thing that I'm not going to hold everything in one fund because I think it's better than the other fund. You don't know which fund is going to do better when. So I'm going to go ahead and play it that I'm holding both funds just because I want to be safe. Now, if I move on to Bitcoin, and I'm going to just sit there and say, I think really there's a bunch of Bitcoin funds out there. But the ones that kind of stand out to me is BITI and BTCI. Matter of fact, they stand enough out to me that I own both of them. There you have it. So I look at those going, wait a second. Since BITI started, BITI has outperformed IBIT. Just to throw it out that, hey, you want an overperformer? Something that's going to beat the market? It's not going to always beat the market. It's not going to always beat the market. But they do different calls with BITI than BTCI. Two different calls. BTCI writes their calls 7 weeks out, rolls those calls at the beginning of the month, so they get 4 weeks, 4.5, almost 5 worth of value out of it before they roll them. Biddy rates those calls every week, approximately 5% out of the money, and they haven't really gotten hit too often with those calls. So you can see how they're actually outperforming the market. That's here and there. Just make sure that you have some type of Bitcoin. Now, I've seen a bunch of forecasts on Bitcoin, and I'm going to say, don't know, don't care. I want income from Bitcoin. Now, I've always had the rule of 110K. I've been buying a little bit here and there now, just because I want to make sure I have more exposure to it. But at the end of the day, I'm still going to be able to get my 8% on cost, because these guys are paying 24 to 28%. So they can have a big drawdown. Because I saw a graph the other day that said, hey, Bitcoin is going to go up to like 150 to 200, but then it's going to crash back down to 70,000. And all I'm going to say is I'm going to DCA in when it's prudent on red days, just to keep it up. But that's just me. But let's go ahead and talk about the boosted funds from NEOS and how they're actually going to work. Didn't know. I had Troy on the channel the other day. It's still in the quiet zone, so let's just say there's not a whole lot that he can say on camera about the funds. I kind of already know exactly how they're going to do this with their boosted funds. Boosted funds. Here is their current holdings as of September 2nd. So they roll those calls at the end of every month, and September 2nd, all that data is out there for you to be able to download so you can see what they're doing with the funds. They hold HODL, 24%. They have treasuries, that's 73%. They have cash. They wrote synthetics on the rest of it, which is cash secured. That is a key point. They actually have the cash to actually justify the synthetics. Then they write the calls. You can see the calls, 581 strikes per ladder. So, at the end, they're totaling less than what they actually hold as synthetics, because there's 1,740 synthetic holdings, and you can just add up the whole 581 times 2. What's that? That's 1602 or something like that. Yeah, you can figure it out. Anyway, they hold less. How much less? Well, let's figure this out. Treasuries, HODL, cash, they have $594,000. Their strikes, 2760, 2870. They wrote strikes on $327 million. That gives them, the percentage they wrote on was 55%. This is the math that I do every single month to say, hey, how much did each one of these write on the underlying? So as they go through their strikes, we will see less and less increase in price. It just makes sense, right? But how has that been relayed into what they're going to do going forward? So what they're going to do going forward, not that I have any additional information, but I read the prospectus and I pretty much know what they're going to end up doing. They're going to write those 1,740 contracts on the new fund. This is not going to be BTCI going forward. This is going to be a new fund under a new ticker those contracts, we're just using BTCI as the hypothetical right now, will go from 1,740 contracts to 2,175. That's how much more contracts, or those are the additional contracts that they're writing. Now, they do not have the cash for those contracts. So there you have it. That is technically being naked calls, because that's how they're leveraging up. They're leveraging up not through swaps, but just writing more calls than they have cash on hand. That's what they're going to do. Trust me, that's what they're going to do. There's 581 contracts per strike. We're going to go to 726 per strike. Again, this is a new fund. I'm just using the old data for hypothetical of what they will be doing going forward. How much money is actually in there, I don't know when they come out, but this is how this would be structured if it had the same amount of assets under management. So it's going to have 150% movement up or down of Bitcoin until the first strike. It hits the first strike the way that it's written today, and that, there's another one. This is what they did last month, or for the month of September. The price movement will go to 108%. And then it hits the second strike, it's going to go to 67.5% movement upwards. That's what it's going to do. That's theoretically, that's the math behind the scenes. Remember, though, when Bitcoin drops, if it drops, it's going to go down 150%. So can we get the strikes far enough out of the money so we don't get hit all the time and collect that extra income? I mean, these things are talking about paying like 45% as a distribution. Just throw it out for conversations. All right. Let's look at the calls so far that they have written on BTCI. So they're going to basically do the same strikes. They're just going to have more strikes of them with the contracts, so they'll be able to pay you out that higher percentage. So the first set of strikes I have, they didn't go through any of the calls. The second set, when this particular index, so they've written on two separate indexes. The second set, it actually finished out of the money just by a little bit. It went in, it came out. I'm missing a gap there, and we're going to show that gap here in a second. Now we get to today's. So Bitcoin, with the price that it hit on Friday, it's sitting right at its first strike. That's where it's been. All right. But we're going to go on to the two that I'm missing. They went through the very first one. It went through. So you're going to only see 67.5% movement upwards. The second one, it finished after the first strike. So you only get 108% of the movement. That is how this fund is going to be structured. And they wrote on two different indexes depending on the amount of contracts that they're writing. One's called a big and one's called a small. They're both based on Bitcoin. The other one I'm going to throw out is SPY. Did you know SPY has 20 years of backtesting? Yes, it's only been out for 3. But maybe somebody takes their strategy from NEOS and they go out and get an index made. If you have a Bloomberg terminal, you can bring it up on your Bloomberg terminal. I do not have a Bloomberg terminal. But magically, I do have a website that can actually produce it and bring it up for me. So there is a NEOS SPY with a 20-year backtesting for it. So NEOS is going to come out with new funds that are 150% leveraged SPY using the same techniques that they did for Bitcoin on BTCI. It's going to be a new fund with a new ticker. They're also going to do QQQI. So here you have what a 20-year back test using their strategy by a third party making the index, shows you how they're going to perform. Unfortunately, you can't get this on TradingView. You can only get it on their website. Now, what I have been able to figure out is they capture over 20 years 80% of the upward movement or the total returns of SPY. So it's been. They're getting 80% of SPY over a 20-year time span. And that includes the 2008 and that whole debacle. That includes COVID and everything else. The data is out there. This is everything, total returns, everything's reinvested. It's a index based on their strategy. So NEOS gave them their strategy and had them build out this index for a 20-year test. It also shows you what the total returns are. So you can literally go back and see total returns over this 20 years has been 531%. And it breaks it down the 1 year, 3 year, 5 year, 10 year for SPY. Didn't know if you guys probably did not know that this was actually available for you to look at, but also points out the max drawdown ever was 47.9%. Just make sure that you're willing to live with that. And if you go into the leveraged fund, well, guess what? That 47.5% or 47.9% is 1.5. So you can do the math. It's going to go down very hard. That's why you got to be looking at other strategies. And I will go ahead and say this, that maybe NEOS is going to come out with a fund that's going to do something a little bit different. We're going to be waiting for that prospectus to come out so we can look at it. The other one I want to actually throw out is NEOS filed for another fund. And this came out on Friday. NEOS filed for, let's go ahead and bring this onto the stage. NEOS filed for a master limited partnership fund, right? An MLP on energy and infrastructure. This was filed on Friday. And since it says high income, I'm going to assume it's going to be 10% to 14% as a guess. Just going to throw that out. It's probably going to be in that range. It's going to be written on an index of a fund that I already hold. Canvas Hawk. There you have it. NEOS is coming out with an infrastructure fund. I'll also go ahead and say, if I was a betting person, and you know I like to play the ponies, NEOS International Fund will be coming out this week. If I was going to be a betting man, it's going to come out this week. We can pretty much rest assured. Troy said mid-September. We are at mid-September. So I expect to see the new international fund sometime this week from NEOS. So here they have a cover call on Bitcoin, a leverage cover call on Bitcoin, a boosted leverage on SPY. They're coming out with a 1.5 on the Qs. And let's think about this real quick, just from a thought process. If they've been able to capture 80% of the price movement, total returns of SPY with SPY, with a 20-year back test, when they add 1.5% leverage, and there's not going to be too much leverage drag because it's not swaps, they should be able to outperform SPY. But that is totally not going to say financial advice or any other advice. Just they should be able to outperform SPY and Bitcoin. You just have to live with this huge drawdown. So it might be something that, hey, maybe you want to play. Maybe if you're like me, you've been watching the charts, you're saying, hey, you can actually swap to other funds and see how it's going to be affected, right? And Joy confirmed on another interview with another YouTuber, probably Dave, right? You don't think I'd watch other YouTubers to start throw this out? It was going to come out this week. Yeah, well, he's not supposed to tell you. Yeah, it's probably going to come out this week. Remember, he was on the channel on Friday. Actually, I had to get that one approved by compliance, so I couldn't post it up when I actually did the interview. I had to wait for their compliance team to actually look at that, because we talked about the boosted funds, which is it's still during the quiet time. All right, I'm going to go through some of the comments now and see what's out there to see if let's see what Jeff Jones. Hi, Brad. Just got into IAUI this past week. Probably bought at the high. Well, that's probably maybe, maybe not. I still think it has room to run. It's not probably the high. I think that, hey, I still go with this once I'm fully into something. Like I've been in a QQQI. Right now, the QQQI on one of my accounts is up like 7% above my cost basis. I'm not reinvesting back into QQQI because I can handle a 7% downturn just to get to my cost basis. Remember, I use 8% of cost for my retirement. I wish I had everything in the QQQI now being 7% above my cost basis, because now I can handle a 7% downturn and still be above my cost basis. I think people don't realize that, hey, when the price goes up like that, hey, you can handle a larger downturn. But I'm in retirement actually using these funds, so I get a little more worried about making sure I don't get my capital erosion away from me, because it really hurts when you start having a bunch of funds going down. The other one, the rate cuts are coming up. It is, I looked at the chart today, the rate cuts are 91% on the CME. So I'm going to say CME watch tool, it is saying 93%. So 93% likelihood of a rate cut coming up, to believe this week, 17th. Right? They're calling for October. They're calling for another rate cut. And in December, they are calling for another rate cut. That is where the market is pricing things in today. I think we're going to probably see 3 rate cuts, at least by their predictions. Again, not going to say financial advice or any other advice, but normally during rate cuts, REITs go up, and you might see the Russell go up. They have in the past. If you look at past history, those have done fairly well during lower inflation, lower interest rates. Inflation's going up, actually. That's another one. That's the big hedge with gold, is because of the inflation. Do I think the inflation is going to affect everybody? Yes. Inflation is never going to go away. They keep on printing money like it's out of style. Ever since we went off the gold standard in 1972, it's one that I don't bring up. So if you ever read The Intelligent Investor by Benjamin Graham. Very smart man. Very smart man. But at that time that he wrote that book, we were on the gold standard. Today, we are not on the gold standard. You have to calculate in the difference between gold standard and the amount of money that was available then and the amount of money that's available today. And that's why you're seeing PEs. I remember that book, right? He was talking about PEs in the 6 or 7 range. Now we're looking at PEs at 22 and higher. That's because there's a lot more money today out on the market that's not backed by anything. It's just, here, we're going to print money. And when we print money, that's why you see gold's going up. And that's why you see that thing called Bitcoin go up. That's going to just soak in the money. I also brought up STRC. I was going to hold STRC for my cash. I got in at 92.13. I'm going to actually sell a bit of that off now that's up in the 97 range. And I'm going to put some of that cash into some other stuff. But I actually did pretty good at that one. Not saying that that's the safest place to hold your cash, but you may want to think about a 10% payer. Right now, it's 10% at $100. It's trading at 97. So you're going to make more than 10%. But I know all these high yield junkies out there want that 35%, 50%. Well, how much of that percentage are you actually living on or taking to pay off your actual leverage? Because you're doing the same thing that NEOS is going to be doing with their leverage funds. They're leveraging it up for you, and you're going to have to pay back some of that. So keep that in mind when you go into these leverage funds, that you got to be careful using leverage on top of leverage. Not advice, just be careful out there. You never want to get too far ahead of yourself and trying to stack up this leverage on yourself, because you can just get smushed during your downturn. Right. I will assume the expense ratio on the boosted will be higher. I would not assume that, because they're not paying for that leverage. There's no additional cost. All they're doing is writing more contracts. I wanted to ask Troy this the other day, going, hey, since you only write calls once a month and you got 3 traders, what the heck do they do the rest of the time? That's not an ask. It's not like you're day trading every day. It's not like you're writing calls every day. You set the calls one time a month. What do they do? Well, clearly those guys are doing all the back testing and figuring out the strategies, because Troy and his partner are out doing other things because they're big partners of the company. They probably have these strategies being built and then back tested and what have you. So don't think that people like NEOS is not going out and back testing some of these funds, because they actually have, I brought up the SPY-I, they actually have 20 years of back testing of the other 2 funds, the one on bonds and Kashi, I do believe. Yeah, Kashi. So they actually have 20 years of back testing of those 3 funds also out on that website. So you can see how they actually have worked over the last 20 years, not like 3 months or 6 months. I think I get beat up sometimes about that. Oh, these funds are so new. It's just like, well, some people have back tested this thing for 20 years. Now, I back tested for 10 years. I did not take it back 20 years. And I came up that it approximately the same, and that was a lot of guesswork on my end of how things work. But they're going to be capturing pretty much up the upside. So keep that in mind. I'm looking for the master limited partnership also. I already have a MLP, right? And that one is a 1099. what I'm seeing from NEOS is that's going to be a 1099, so I can hold it into my IRA and Roth IRA and get a little extra. And that index will have a MLP as part of the index. I actually looked up the index the other day. Right? Let's see here. What does John have to check out the vintage hat? All right. I actually have a blocks hat. Just didn't put it on yet. I've got a Yield Max hat too, actually. Right. Uh, you think BTCI is tax efficient? Well. I don't know. I don't believe I said I don't know. Did I just say I don't know? I do know. Yes, it's tax efficient. But let's go ahead and look this up for you. I mean, literally, I'm going to show you where you can find this yourself so you don't have to ask somebody on the internet if something's tax efficient. Right? Because this is readily available out there for you. Right? We can go to BTCI. We can scroll right on down. And we're just going to go ahead and look at their 1981s, and we're going to bring up the latest one just because we can. Let's see here. We move. I'm going to add a new one to the stage. Share the screen. And we're going to look at this. So the question is it tax efficient? And if I come out here and I look at the tax efficiency on the 19A1s, it tells me fiscal year to date is 94% return of capital. If I go back and I look at earlier this year, it was at 93% return of capital before the fiscal year. So yes, I'm going to say it is fairly tax efficient if you understand return of capital. That is another whole conversation all by itself, is return of capital. All right, so hopefully that answers that question. All right, let's go ahead and make myself the whole entire stage. We'll remove that. And we'll look up stuff as you guys ask questions. I'm more than willing to look up stuff today and share what's out there, right? I was thinking an article Seeking Alpha, BTCI and BIDI. BIDI may be more tax efficient. That's actually kind of funny that you bring up the difference between BTCI and BIDI being tax efficient. They're riding on the same index. If they're riding on the same index, and how does one become more tax efficient than the other? They both hold HODL. They both write on a portion of the portfolio. They both write on the same index. Just thought I'd throw it out. You know, hey, what would I know that they write on the same index? So how can one get more tax efficient than the other if they're both on the same index? But that goes to show some of the questions that are out there, because it's actually a good question, because I don't think people, just moving around a little bit, I don't think people actually go and look at their holdings. Really don't. I got asked a couple questions recently, in my community, and they literally asked questions about what does this actually mean? And I was a little taken back, surprised, because it's actually just coding out the date and the strike price and what they made for the strike. Not everybody, and that's really something I going to bring it. Not everybody is out there able to write calls. Either they're a little bit timid about doing it or buying a put. I've got experience doing it. Others have experience doing it. But some people, especially as you get older, they get a little technology. Come on. My mom still has a flip phone. She's 90. Do you think that she's able to go out? I'm going to go buy a put today. No, she is not. So keep that in mind. Just because you're technically savvy does not mean everybody else is technically savvy or have a cold storage wallet for your Bitcoin. Because literally, I know people that have flip phones still today. Just keep that in mind. Not everybody's still there. Right? Interviewing Granite shares. Yes. Matter of fact, I need to send Will and Alex an email because I'm supposed to meet up with Will out in California. So yes, Granite shares will be back on the channel again. We'll talk about the yield boost. Now, yield boost to me has no upside potential. They have somewhat limited downside potential, but they pay a high premium. I'm just going to go like this. Might be something you put a small portion of your portfolio in, but you're going to have to marry it to the underlying because it's literally just going to go down. It is the definition of NAV erosion. So the yield boost is the definition of NAV erosion. There is no way that it's going to go up in price. It just can't happen. But at the same time, they pay high distributions that you can actually take a portion of that off and buy something else. Now, just don't get into that. That's too much work for Brad to be doing stuff like that. That's craziness because I gotta go buy this. I gotta go buy that. I want to spend my time at the beach. Let somebody else do it. That's here and there. All right. Some people might get into that stuff. Yes, John. If you didn't know, John's actually in my community on Circle, so he gets a little more out there. Yes, high yield junkies. Yes, they're out there. I mean, come on. Got a little Misty, got a little NVII from Rec Shares. I have a little bit of high yield junkies in myself. I mean, GIAX pays 24%. So yeah, I get it. Hey, yeah, but I'm only taking 8% and reinvesting the rest. Just keep that in mind. Here you go, John. I only need 5 to 6%. So I'm very happy with an 8 to 12% yield. Covers me on the downturns. Yes, exactly. I think I've shown that before. So if you have a 8% on cost and you have a 12% payer, it actually covers you 33% downwards. So your price can drop 33% and you still be covered. You still be able to collect your 8%. I've shown that graph before. But anyway, that's another. I don't buy anything on some of these QQQI. I haven't bought that in months, because it's above my cost basis. So now what do? I don't need to buy it. I'll just collect the 14% and I'm going to take my 8% because that's what I'm living on. And I'm going to take that extra 6% and put it mostly in the gold funds, actually. That's where I've been putting things in. Brad shaved head today wearing a nice hat. Actually, Brad didn't shave it all today. And I'm wearing a hat because my wife was actually doing stuff in the bathroom. So I was like, oh, I'm not going to shave and do everything else. But anyway, let's see here. Brad looks awesome on a shaved head, I think. Yeah, it's shaved head. No, I still have hair. Still a little bit of gray hair, actually. You have it. Getting a little bit older. All right. Let's see here. BTI is great to me so far. Smoother, lower risk. Yes. BTCI, BIDI. Oh, telling you, I got both monthly versus weekly calls. Which one's going to win? One's 5%, one's 10%. I'm going to play both. I want to play both sides of the fence, right? 93-year-old Windows 98. At least I'm on a Mac now. That's what I'm using for a computer, right? Why do you think don't have a lot of attention from investors despite outperforming most of the competitors? Well, that is a very good question. One, Howard's a nice guy, and I don't think that he's gone out and actually done a lot of publicizing his funds, such as the Curve or Yield Max or everybody else. I mean, we did a thing on X the other day with Goop and Huey and the Round Hill Fund. And the Round Hill Fund, since it's been out, is 1.2% leverage. So yeah, it won total returns, but come on, that's a directional play. And that's something I want to say with the boosted funds. They're directional plays. When it's an up market, you're good to go. When it's a down market, maybe you don't want to be in those. Just throw it out. But Goop, total returns, beats GUI. Just does, right? So, yes, I think Curve gets underrated. Everybody's that yield junkie and wants that huge yield compared to something that the actual NAV is going up but pays a smaller yield. And actually got into what the whole conversation with Howard was is, hey, he now recognizes that some of these funds, he understands what people are trying to do with them, and he can understand why they want the higher yield. So we're also going to see Curve. I didn't know if you knew this or not. You know, Curve has filed for we won't call it Alti, but let's say it's Calty with the K-T-Y, right? Anyway, they actually filed for something. We're going to see what that yield is going to be. I mean, I own KQQQ. It actually beats the index, I do believe, and it beats QQQI, but it only pays between 8 and 12%, depending on how many of those calls that he's actually writing. When I had him on the channel, he only rates the calls on the actual stocks that are trending down. They're trending up. He's not writing calls on them. Okay? Common sense tells me that might be what you want to be doing. I don't know. So I can understand why he doesn't have high yields on it, but I also understand that my NAV is going up on that. And I also understand that he's only writing it on the stocks in the fund that are trending downwards, not trending upwards. It's another thing out there, right? And yes, totally welcome about my reflections on Greenwich shares. I think that if you're using them correctly, great funds, really great funds. I mean, really, he is getting the income, but it is going to have NAV erosion over time. And there's nothing wrong with that. You're going to have to invest back into the fund, but your total returns will be okay. And there's a difference between total returns and price. And you got to get that into your skull. And I'm going to say, not all of us, but even me, I have a problem seeing a price chart going down to the right. It's a psychological thing. But then I can look at a total returns chart going up. So I sit back and I get where everybody struggles with that, but you got to identify that and then decide what type of investor you are. Just because I don't invest that way doesn't mean that you don't invest that way, because we all have our own personal goals. I just want to make sure that I get through retirement without losing all my money. Come on, let's go through this. This one, okay. We have egg on our face. Yes, I did the video December when these funds came out with Egg Q and Eggy and Eggs. I didn't know. Let's bring that up on a chart. Let's go ahead and do that, right? Let's go ahead and bring those up on a chart. We'll add this to the stage. Let's see here. We are going to share the screen. We're going to share comparison tool. So this way you can actually follow along. All right. If you follow along, let's do egg. Let's do QQQ. All right. Everybody likes the Qs. We're going to do QQQI, right? Because we're going to compare it against NEOS. I think that's a fair one, right? And then we're going to do egg Q. Well, nest. Huh. Well, look at there. Here we are talking about QQQI and Qs, and you can't beat the index. Oh, you just can't beat the index, guys. You just can't beat the index. I mean, come on, right? So yes, we have egg on our face. Egg Q has really done well, right? But if you look at eggs and we look at eggy, right? So what's the difference? Just so, if you don't know, I'm going to throw this out. What's the difference? So egg Q does not have any downside hedge. If you didn't know, eggy has a downside hedge and eggs has a downside hedge. So egg Q pays out more as a percentage. The others pay out less because they're taking a part of that percentage and actually writing protective puts for you. I do believe they're doing bi-monthly is how they're actually doing it. They're not doing a quarterly put, they're doing a bi-monthly put. But don't quote me on that. Go do your own research. So yes, so we should have bought Egg Q and been happy with it. Actually doing a pretty good job. They're actually focused on a whole lot more than, it's a very small basket of stocks. All right, so I want to stop sharing that one. All right, it's a very small basket of stocks out there that they're actually writing on. And yes, I have their website saved because I did that video back in December. Should have bought it then. I thought it was interesting. I thought it was interesting that they were hand picking stocks and they're actually doing very good at what they're picking. And if you don't know, Title is running it, so it's Jay and the crew that's actually writing the calls on these things. So it's not like it's somebody we don't know writing on these ETFs, right? So, I mean, we can, let's go ahead and just bring this up, right? So this is what, let's see here. Share screen. Stop sharing. Share screen. Huh. It won't let me share that one. Why will it not let me share it? Let me do this. I'll share it this way. So what do they hold? I mean, let's face it, Broadcom, Netflix, NVIDIA, Palantir, VistaCorp, Coinbase, Google, Oracle, they're holding everything that's going up. Let's face it, right? I mean, they're just holding the actual funds, the stocks. that are trending upwards. They're doing a very good picking stocks and then writing on those stocks individually. So they have it. And what I saw was they're not writing on all of the holdings here recently because they probably made enough income that they're sitting it on. Oh, we got enough income. We can just do some more selective. So I did notice that they didn't write on everything, and they are outperforming the Qs. So, hey, these covered call funds can't outperform the Qs. Okay, I guess they didn't do enough research when they say stuff like that. All right, we're just going ahead and base that on people think that they know everything. And trust me, I don't. I'm just out here researching, sharing what I find with everybody else. Let's see here. I'll skip on the Qs and buy. Yeah, I'm going the opposite way. I'm going to go with the Qs, right? SPY. Yeah, that's the question, right? Because the underperforming companies of the S&P 500 probably will be going up as the rate cuts happen. And if you're basing this on rate cuts, that's probably a good move, right? And IWMI is going to probably do well with the rate cuts. So I get exactly where he's coming from, right? And yes, I will do one on eggs eventually. Just only have X amount of time, and I'm spending more time in the community, so I'm doing less videos. Oh, price hand down. You just gave it advanced college level class on options trading for free. Yeah, well, not really options trading. I should do some more classes on options trading and how they actually work, but I do feel like I have enough time in the day. Hey, Brad. Didn't shave his head after all. Yes, I did not shave my head after all. Right? Please elaborate on which gold funds you are in. I am in, he says A. I think it's IAUI. So I have the NEOS fund. I also have KGLD. I do not get into, I do believe GDXY is on miners, right? So not a big fan there. And GLDY, I think that's again on, what is GLDY? I think GLDY is on miners too, right? GLDY ETF. Right. Oh, it's a Defiance. Yeah, okay. Let's just go ahead and say no. No. Sorry. They might be doing well. I do believe those are on miners, and I'm going to stick a little more not to the miners, at least for now. All right. I did go with SLJY on silver. I did go that way. But I also bought, I'm not going to even get the letters right, SIL, whatever, the one that's not being capped. I bought that also, but 20% of that and 20% of the other gives me that 15% thereabouts. So we should be just fine. Oh, let's see here. One, we'll go here. You did a good move. You got two of them, and they both appear to be beating the Qs. That's a good move. Q Devo. I don't know. I didn't think, I'm going to say, I don't know. Egg Q against Q Devo. Why not? Let's bring it up. All right. Put comment down below. Who do you think wins on this one? It is Egg Q. Without a doubt, wins on that one also. So everybody's like, oh, Q Devo. Well, just thought I pointed out that, hey, Egg Q seems to be beating Q Devo that everybody's getting into. Now, I hold Q Devo. I like what he does too, but I just thought I'd throw that out. Right? This NEOS is very smart by releasing emerging markets. infrastructure funds, I think they are. I think I did the video of retire on NEOS, and this is more retirement on NEOS. That's different stages of our lives. I'm in the retirement stage, right? Some people are like, hey, you can't put all your funds in the NEOS. What happens if they get sued? I actually asked Troy that the other day, and he's like, he had to laugh. All this stuff is in a trust at US Bank. They don't touch your money, right? They don't touch your money at all. Matthew, thank you. Greatly appreciate that. And I appreciate everybody that has out there. And yeah, the IGLD is decent. Yeah, you're not going to get Brad to say anything else. The same thing with the other funds. I think they're okay. I just like what Curve is doing, and I like what NEOS is doing. I've studied them. I understand them. I know where their calls are. And that's what gets into some of these funds, like GLDI. I can't see their calls, just like I can't see JEPI or JEPQ. And let's talk about taxi fishing. And I'll just go ahead and talk. JEPI and JEPQ are not taxi efficient. Don't know what. Yeah, they're the beast in the room. $25 billion assets under management and not tax efficient. So don't get suckered into that. Go to the suckered in. Invest as you feel, but they're not as tax efficient as something like a NEOS or even AQ is going to be more tax efficient. Just keep that in mind compared to JEPI or JEPQ, right? We'll just go ahead and say good morning. That's because he has a dog. Got a dog picture? I'll put you up. Let's throw it out. AQ doesn't have much income. That's because nobody is talking about it. I mean, I did one video back in December. I remember it was before Christmas. It's when I did my video on that one. And it has done extremely well. AQ only has a 5% yield. Okay. Okay. Literally, we're just going to leave this one up. We are just going to leave this comment up. And we're just going to go ahead and do the math to show you. I don't know where, and I see these comments all the time, and it's just like I just don't get where these comments come from. I really don't. All right, I really don't know where these comments come from. But hey, they can make comments, and I'll just sit here and do what I have to do to say, let's go ahead and share this, right? Well, we're going to share screen. This person probably went out to, she probably went out to Yahoo Finance or Seeking Alpha and doesn't realize what these are doing, right? Here's what they've paid. 20 cents, 19, 18, 18, 18, 21. All right, if I take those together, I'm going to take them in, and I'm going to put those into an Excel spreadsheet. I'm going to add those up. All right, we're going to just add them up. It's $1.17. All right, that's 1, 2, 3, 4, 5, 6. 6 months. So if I times that by 6, right, that gives me, or times it by 2, that gives me that they're going to pay $2.35. Right? What is the current price of $40, $47, right? I'm going to have egg on my face. I do the math. $2.35. That is a 5% yield. Maybe he is right. It is only a 5% yield. I thought these guys were going to pay 30%. Let's go ahead and take a look at this. That's an extremely low percentage for being what it's supposed to be paying. So I stand corrected. I could have sworn these guys were paying 30%. Let's see here. Go out to Seeking Alpha. Do egg Q. It's not even out there. So yeah, he is right. Mathematically, it comes out to 5%. So yeah, there you have it. Let's see here. Could have sworn that they said that they were doing something else. Oh yeah, there you go. So eggs is the high payer, not egg Q. Right? So egg Q is 5%, but that's the one just reversed. Egg Q is the one that has the hedge. Because that mathematically turns into that times 2. What's the price? 41. Yes, that turns out to be a 12% payer. Right? So one's 12%, one is 5%. So yeah, I stand corrected. There you have it. At least we ran through the math together. So it looks like eggs is 12.7 and egg Q is 5. So that's probably why it doesn't stand in my portfolio. There you go. Right? So there you go. Why mixed up between eggs, more income. Yeah. Well, not enough for me to actually jump over there. I appreciate you. Thank you for income. Really appreciate it. Eggy is best for income. Yeah, so Eggy. Is that the one with the highest yield? Yeah, that's the one with the highest yield. If I look Eggy, sorry about this. I'm just going to do the math and I'm going to add up Eggy for us. If you're looking for that yield, 12%, 5%, this one is going to come up a whole lot more than that because they already paid $4 in distributions. Where's their price? Their price is at $40. Let's see here. Let's go back to my Excel spreadsheet, and that comes up to that divided by that. That's 24% yield on Eggy. So Eggy is the one with the highest. So there you have it. That's what happens when you try to do this live. So greatly appreciate everybody correcting me on which one's which. And Eggy is the best for income at 24% yield. Egg Q is at 5% yield, and eggs is at 12%, 12.7. So anyway, hopefully I went a little bit longer today. Hopefully everybody liked it. If I don't see any more questions, I'm going to let everybody go. I think it's going to be another good week at the beach. I'm still at the beach, and I'll be here for a little while longer. But any other questions down below? I don't see any. So enjoy the day. Have fun out there. And as these new funds come out, I will try to go find something, do a little more research, and bring it to you. Eggs was kind of like off the cuff, remember, 6 months ago. Right? Catch anything fishing? Let's see here. Enjoy the beach. Thank you. Catch anything fishing? My daughter did. I did not catch anything fishing. Right? Enjoy the day. Thank you. Enjoy the beach. And thanks. Take it easy, guys. Have a great day. God bless.